All right, tell me about what's going on with Cursor. Fastest
All
growing
right.
startup of all time, maybe?
Fastest growing startup of all time. We have talked about this impending funding round several times on Twist. I'm glad to kind of bring it to a conclusion. First of all, one, it's more money than we thought. It's 900 million, not the 500 we have been discussing. And the valuation is a little bit higher than I anticipated. It's a $9.9 billion, I presume post, so probably $9 billion pre plus the capital. So call it 10.
Yep.
Thrive led, Andreessen, Excel, and DST were in there. All that, blah, blah, blah. Who cares? It's another AI round. What matters is this. Cursor says that it's now not at 300 million ARR, as was reported. It's now above 500 million in annual recurring revenue, going from essentially 100 to 500 in 6 months.
100 to 500 in 6 months. So that would be doubling every month, basically. You went from 100 to 200 to 400. No, less than double, 50% a month. Went from 100 to 150, 225
but
to
still
325. Yeah, it's like 50% growth month over month. It's crazy.
It's absolutely insane.
That would be like 10% growth every week, something in that range. Week over week, 10% growth is crazy.
But from a 9-figure base, I mean, if the seed stays
for a paid product, like 10% would be fast for a free photo sharing app.
Yes.
To do it for a paid product is bonkers. This is bonkers. So it's spreading like wildfire. It's kind of like Slack spread like wildfire.
Yeah. But I wanted to go back and get some historical context on how fast is this growth? Because one of the best IPOs ever, and going back to different ways to go public, Google went out via a reverse Dutch auction, and that went so well that no one ever tried it again. But I went back to their S1 and I pulled their numbers, and Google went from 19 million in revenue in 2000 to 86 in 2001, and this was the key moment for them, 350 in 2002.
Yeah, 4x, yeah.
But that's still so much slower than what we're seeing from Cursor here. So I think this goes to show, one, that AI-driven tooling for highly paid professionals is something that companies will just pay for. And also, I think it shows how much bigger the internet is today. Just in
I was about to say, like 2000, there was probably 500 million people online, and now there's 4 billion. So yeah, it's 10 times as many people online probably, and probably 3 times as many developers, and they probably all have corporate cards now, and they weren't allowed to buy this stuff. This is combining the virality of consumer with a subscription model, which, it's kind of like Netflix or Disney Plus. When we saw Disney Plus come out, it really grew fast for that first couple of years in terms of the membership, especially at $8 a month. So yeah, it's awesome. And this company could be going public. So Cursor, if it does this again, if it gets to $1 billion in revenue, like they should go public.
I mean, I think so. There was an interesting story in, I think it was Reuters a couple of days back, that said that Windsurf and Cursor have negative gross margins. I don't know if they actually meant negative gross margins or negative operating margins. I would be shocked if they actually had negative gross margins. But there's an interesting kind of split screen here that we can draw. So we've talked about Anthropic, the foundation AI model company, $60 billion, reportedly at a $3 billion run rate now, 20x recurring revenue, more or less. What's interesting is Cursor, 10 billion, 500 million, also 20x.
Yeah,
and they both just seem so cheap to me, given their pace of growth. Is the market just concerned that they're not going to keep growing this fast? Or
20 times top line is, pretty juicy. But appropriate if you're growing, if you're doubling year over year, tripling year over year, et cetera. So, you're getting a big premium there because when it becomes a public company, it will be 20 times earnings as opposed to top line, right? So, sometimes people conflate the profit with the top line, sales. So sales here is 20 times sales, not 20 times earnings. So at some point, the quality of this revenue, is it profitable, is going to be the question. Now, we don't know how much compute is being used by each of these players. What if, like YouTube or other businesses, they were in a J curve, or Uber, where they're selling rides for less than the ride cost and they're losing money every ride. That J curve could be what's driving some of this revenue growth. They could be selling $100 bills for $50 right now, and they need to fill in that gap, and that gap would get filled in by people becoming addicted, the price of compute going down, and maybe their ability to charge going up. And that's the J curve, right? You invest and you lose money, lose money, lose money. Then you stop having to invest money and you're growing, and then wildly profitable because the costs stay fixed. And you're raising your prices and it's growing viral, and you don't have to pay people to download the Uber app because they're just getting invited to Uber Teen by a friend, or you don't have to get somebody to know what Cursor is, because the other 4 developers that they know are like saying to the 2 developers, "You don't use Cursor, are you an idiot?" And they get pulled in without an advertisement, whereas the first couple might have needed to get hit with an advertisement.
Yeah.
So these are going to be incredible businesses. The business is strong. Venture has a bright future. The wrath of Khan is over. And I think DPIs are going to spread through the heavens, and America's going to win again.